You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. That music means we are back once again for Education Wednesday time. Once again for the premier options education program, the one that's been holding down the fort for pretty much a decade now. Crazy to say that out loud. It's the one, the only, the irreplaceable Options Bootcamp. My name is Mark Longo. I will be your host, your guide on this options journey, reminding you, of course, if you like what you hear on the on-demand front and you want to leave a review to help your fellow friends and newcomers to the world of options discover this long-running behemoth of the options educational landscape, you know where to go. Wherever you're listening to this right now, get on in there, leave a comment, leave a 5-star review. If you're allowed on your platform, it does help all the new folks continue to enjoy the program. If you like what you hear, you can always reshare it, of course, on your social media platform. The more the merrier when it comes to learning about options. Of course, if you want more and you want merrier, you can always join us in the old secret club that gets you access to the live. So you'd be listening to this episode right now instantly. You wouldn't have had to have waited a week for episode 2 of our volatility extravaganza. So you can get that live. You get all the other shows we do throughout the week live, engage with all of our hosts pretty much instantaneously. Great pro Q&A sessions as well that are exclusive to you guys. And of course, Options Oddities, which is also exclusive to you guys, as well as awesome giveaways. They're packing stuff up here in the studio as we speak to ship out to all of our various winners in the secret club. So theoptionsinsider.com/secret club is the place to go to begin your journey to the dark side. And let's see who else is joining me. Speaking of the dark side, we are joined once again by the black-hatted one himself, Mr. Dan Passarelli, the founder of Market Taker Mentoring and the author of 1 or 2 or half a dozen options-oriented tomes. Mr. P, welcome back to Options Bootcamp. You know, it feels like we just did this, sir.
Yeah, it kind of does. It's like deja vu all over again.
Deja vu indeed, listeners. If you don't know what we're talking about, a little bit of a glimpse behind the scenes here of the old OBC. Check out the last episode. Doing a little bit of back-to-back action here on the show today. And speaking of back-to-back, let's get right back into it. It is time for part 2 of our great VIX/volatility extravaganza.
All right, Boot, it's time to get in line. What you're going to do is learn. You're going to learn how options work. Do you hear me? Yes, sir. You're going to learn options trading inside and out, basic to complex. There will be no failures. Do you hear me? Yes, sir. Pull in, prepare to learn. Yes, sir.
All right, everybody. I know you have a lot of questions. We're going to get to those a little bit later in the mail call. But first off, we need to keep on rolling, keep on trucking here through the volatility landscape. Last episode, we talked about VIX, a.k.a. the fear gauge. What is it? Can you trade it directly? The answer is not so much. Instead, you have to trade either the VIX futures or the VIX options. And we got into all that fun on the last episode. If you missed it, go back and check all that out. But there are other ways to trade VIX and indeed volatility out there. We're going to get into some of that today. First off, let's go out to a product many of you are probably familiar with, or at the very least have heard of. It has very much grown into a very popular product over the past decade or so, past 5 or so years in particular. And this is VXX, aka the iPath Series B S&P 500 VIX Short-Term Futures ETN. Say that 5 times fast, listeners. It is a mouthful. What is this? Well, first off, the end of it there, ETN is an exchange-traded note. It's not an ETF. It's not an exchange-traded fund. It's an traded note that attempts to effectively replicate a front-month VIX futures position, and then it turns that into a tradable security you can put in your securities account. Hey, great. That means you don't have to mess with the futures, right? So if you were a little bit confused about last episode, we were talking about backwardation and contango and term structure. You're like, man, I don't want to mess with that noise. I want to just dive into the vol trading. Well, VXX is a product that was designed for you. It's going to effectively roll from that second month future in VIX into the front month future and effectively have a rolling position. In fact, I pulled it up this morning, and as of right now, the holdings in VXX are about 2/3 front month VIX future, so the March future, and 1/3 April future. So you can see how they have kind of a rolling balance to that. Now, hey, that sounds great, right? This is something that effectively replicates that very near-dated VIX futures exposure without having to deal with all this futures crap, right? And the answer is, I guess yes, but very much no as well. First off, before I get into all that, Mr. Dan, do you have a lot of experience trading VXX, and do a lot of your mentees come to you asking about VXX, and what are your overall thoughts on it?
I have some experience trading VXX, yes, and some of our traders do. My overall thoughts on it is it's very, very complicated. When you introduce it here, excuse me, I need a drink of water. Hold on a second. When you introduced it, you're referring to our last show saying, the term structure and contango and backwardation. And if you don't want to deal with that, there's VXX. You're not directly dealing with it, but you still are indirectly dealing with it. And I would say in some ways, you have to understand that on an even deeper level with VXX. It's just so, it's one of the most complicated things that someone can trade. And, that's really great if you understand it deeply, but if you don't, you're just going to get eaten up and spit out.
Yeah, you remember on the last episode when I said I kind of chuckled at the CBOE CEO at the time when they said they were going to launch tradable VIX futures. I said, well, who the hell is going to want to trade those outside of big institutions? I can't imagine retail ever touching that. If you had told me, a decade and change later, we would have now an ETN that would attempt to replicate said VIX futures position, and it would be hugely popular with retail, I would have said, what kind of bizarro world are you living in? But that is the world we all live in today. Listen, this product has an ADV of 350, closing in on 400,000 contracts on any given day. So some days it can do more paper than VIX options does. So this is a very popular product. And I'd wager a lot of the people out there slinging this thing don't really understand it or how it works. And they probably should listen to this episode. So listening to this episode, listeners, you're already ahead of the game of a large portion of the people out there who are slinging these things. So getting back to what we said before, does that sound like a great thing? It kind of does, maybe, but once you hear what we have to say, maybe you will think twice about this. As I mentioned, this is a product that is buying a little bit farther out futures, usually month 2, and then rolling them on a very regular basis into that front month future. Now, remember what we said on last episode. In most situations, VIX and most futures products really have that contango term structure. Again, I know, terrible word. Bear with me. That means the prices tend to be higher the farther out you go on the term structure. So if you think about that intuitively right now, if I said to you, you're always going to go a little bit out on the term structure and buy a future, hold it for a set period, and then sell it when it gets to the front portion of that term structure, you can just think to yourself, wow, I'm actually traveling down that curve. I'm buying a more expensive future and I'm selling it when it's a lot cheaper. That's what VXX is doing on a regular basis. And that's called your negative roll yield, listeners. That's another terrible term. I get it, because it's a negative yield. That's kind of a counterintuitive concept, but that's what we're dealing with here. You can call it whatever you want. Drag. There's a lot of different terms for it out there. And that drag is enormous. It can, depending on how the futures term structure, the slope of it, it could be anywhere from 7% a month all the way up to much more than that on a given basis. So over time, there is a dramatic drag, a dramatic weight. It's like I took VIX and I just hung a heavy weight around its neck. I said, hey, go forth and buy and hold this thing. You might say, I don't know if I want to do that. In fact, if you go to the chart, the actual iPath website, the prospectus for VXX itself, and say, hey, let's look at the historical performance of this, you will see on the chart on their own website that this is one of the greatest value-destroying products in the history of mankind. This thing is being dragged down month after month, year after year. It wants to go to zero. It is heading to zero. It's a question of how long that takes. And if you look at this chart, they release a new note, it erodes. They release another new note, it erodes. Again, this chart has done this multiple times. So if you invested money in the inception of VXX, you now have a few fractions of cents on the dollar for what you put in there. So if you learn and take away nothing else from this episode or what we talked about last week as well in our whole two-part volatility extravaganza, you should learn this. Please, for the love of God, do not buy and hold VXX. This is not a long-term buy and hold product. If you say, I want to put VIX and volatility in my securities account, but I don't want to deal with the futures, let's just buy into this VXX and I'll have it in there for a rainy day. You are doing it wrong. In fact, this is from iPath's own prospectus. Don't take my words. These are the people who issue the product telling you this. They say, our ETNs are only suitable for a very short-term investment horizon. The relationship between the level of the VIX index and the underlying futures on the VIX index will begin to break down as the length of an investor's holding period increases, even within the course of a single business day. The relationship between the level of the underlying index and the value of the ETNs will also begin to break down as the length of an investor's holding period increases due to the effect of accrued fees. The long-term expected value of your ETNs is zero. That's the people who create this product telling you that, not me. If you hold your ETNs as a long-term investment, it is likely that you will lose all or a substantial portion of your investment. So that's the product issuer telling you that. So this is a short-term, intraday, maybe a few sessions at most type of holding period for this product. So beat that into your brain, listeners. Again, if you come away with nothing else, come away with that. Now, there are a few caveats. You might say, well, who the hell would ever want to buy this thing? Well, there are some times when it may work out to actually buy VXX over the short term. Mr. Dan, I'm guessing you have some thoughts about that because it's happening right now.
Oh, man, I've got lots of thoughts about that. Well, first of all, a couple of stories relating to that. I was talking to, there's a friend of mine who I talk to just every now and then, like every couple of years, and we're chatting, and he had some question about how to use his brokerage account or something. I hadn't talked to him for a couple of years before then. And like we did like a screen share and he showed me what was in his account. I'm like, wow, you've got this VXX. What's that all about? He's like, oh yeah, I'm just buying it for the long term to hedge my portfolio. I was like, no, don't do that. And he didn't seem like he believed me. I haven't talked to him since then, so I don't really know what happened. But yeah, terrible idea.
It's like being a doctor, right? Everybody hits you up with questions. Doctor, hey, I got this thing on my face. What should I do? We get the financial equivalent of that.
Yeah, exactly. And then, this was several years ago already, probably about 5 years ago already. So the number is enormously bigger. But I remember reading an article, and there's a quote by Robert Whaley, who is the guy who helped design the VIX and helped design VIX futures and options. And he stated, and geez Louise, I forget what the value was way back then. It's so much more now. But he was like, yeah, I calculate that the market collectively lost more than like $1.5 billion buying and holding volatility products and doing it wrong. Like a massive amount of money. I wonder if we talk to him nowadays, what he would say. I'm sure it's way into the billions, way into the billions. But I do want to point out one interesting thing here. So it seems that anytime you talk about options, if you ever use the word always or never, you're making a mistake. Because right now, as we talked about on our last show, and I didn't really think of it then, but I'm thinking of it now, well, especially because I wasn't thinking about VXX on the last show. If you look at the term structure of VIX futures now, we've got every consecutive expiration, it kind of goes lower and then it kind of maybe stabilizes a little bit. So we're actually in a situation right now where when we do the rolls, it actually is going to have a slightly upward bias, because there's right now we're in like a backwardation market, and when people are when the fund managers are selling the more expensive front expiration futures, they have to end up buying the cheaper back expiration futures. This is not a normal situation, which I guess is why they call it backwardation. And so this is one of those rare times when VXX actually has a slightly upward bias. Pretty crazy, right? You wouldn't think that's the case if you have been studying this for a while.
Yes, that is the interesting part. That's why I said before, who would buy this thing? Well, it's times like now where perhaps you may consider doing just that. As Dan mentioned, we are in a backward period right now in the VIX future. So the front portion of the curve more expensive than the longer term portion of the curve. So as you're buying 2 months out futures and then selling them at 1 month out, you could see usually that costs you money. That's that drag. But as Dan mentioned, in these rare backward scenarios, it's actually a bit of a boost. It's kind of turning on the gas for VXX right now. So instead of dragging you down, it is lifting you up. In fact, those numbers I mentioned on our last episode as of this morning, the April future was at a 30.62 and the March future was at a 31.25. So you're talking about a 0.63 or so boost. If you bought that April future, then sold the March future, you got 0.63. A bit of a premium. It's not a loss, it's a premium. So that is actually helping to turn on the gas in VXX. Because if you look at, again, go back to the iPath's own website, they will show you these numbers. They don't hide it. And you could see, again, the long-term performance is garbage. You go out even a year, it's off nearly 63% out there. But if you look just in the last month, VXX is up 42% in the last month. So when things get backwards, that's when VXX has a little bit of an accelerator to it, to the upside. So if you wanted to play a little bit of the buy VXX and try to ride that train a little bit, again, short term, a few sessions only, then this is the time you may be influenced to do such things. Again, these are very aberrant scenarios. VIX futures tend to not remain backward for long. And one of the big questions about any vol crisis is how long are these futures going to remain backward? That's what everyone's trying to figure out. Once we get a handle on that, once the futures term structure flattens out and then goes back into contango, at least for the near term, the crisis is over and VXX is going to go back to its old days of having that weight, having that albatross around its neck. So right now, VXX, a very active, very interesting trading vehicle, but definitely short-term only out there. So intriguing stuff. And then, Dan, we can go above and beyond. We can do VXX one better. You say, I like that idea. I like playing around and having a product that I can put in my securities account that attempts to replicate a front month or a near-term VIX futures position. What if I want to go a little bit above and beyond? Maybe let's say I want to go, levered. Well, then there's another product out there you may be interested in or have heard of. And that is UVXY. This is the ProShares Ultra VIX Short-Term Futures ETF. Say that one 5 times fast as well. This is effectively a levered 1.5 times product that attempts to replicate 1.5 times the daily performance of a not that heralded index, the S&P 500 VIX Short-Term Futures Index. So bear that in mind. Very short-term. So that's what we're looking at. We're trying to replicate 1.5 times the movements of very, very near-dated VIX futures. Think about this in terms of VXX, but kind of turned up to 11. All the same caveats and issues and warnings that apply to VXX apply even more to this product because it's levered. So we're going to see the same thing in most environments. When there's a contango in the VIX futures, you're going to see a huge drag on UVXY. So it's going to get sucked down. This thing's going to be another great long-term destroyer of value. What you've seen with UVXY actually is that they will tend to every year, maybe year and a half, have to reverse split it 4-1. They usually get it back up to about 40. It drifts back down to somewhere around the 10 range, and then they reverse split it, and they do the whole dance again, and they just keep destroying money over and over and over again. So this is the same thing. If we said VXX was a short-term product, UVXY, really intraday is probably what I recommend. And if you're going to trade the options on this thing, bear in mind, the vol gets really pricey out here really quickly. So if you're going to straight up buy calls, buy puts, very hard to make money. It's very hard to have a commensurate move to pay off that high level of vol. You're going to need to usually sell something else against it. Maybe a spread. Often it's going to be a multi-leg spread like a butterfly where you can sell multiple contracts against one to try to pay off those very, very expensive volatility levels in a product like UVXY. Also, this is not a set it and forget it type product. If you're going to put on, let's say, a put fly in UVXY or a call fly, whatever it might be, you're going to want to babysit that. You want to keep an eye on it. So if you've got your day job, you're very busy, maybe UVXY not a product for you just yet. This one can move, and it can move really quickly, and it can move at the drop of a hat, and it could cause a lot of tears. It's off 8% just today. Yeah, it's an interesting product. This thing can move quite a bit. I've had many positions on it. Looks like they were looking great. And then something would happen in the marketplace and UVXY turns on a dime. If you have some profits in this one, maybe you want to be a little bit more aggressive about taking them off. It's an intriguing one, but also the same condition I mentioned earlier about VXX also applies to this. When things get backward out there, it's an interesting time, interesting frame of reference to look at UVXY. Dan, this one's kind of a little bit more esoteric, a little bit more of a niche product than VXX, even though it is starting to do a fair amount of paper. It's around 250,000 contracts ADV from an options perspective. So it's no slouch out there these days. Do you have any thoughts on UVXY, sir?
Yeah, I mean, I think once you get good with all the little quirks and nuances of VXX, and finally you can make some money, that is another way that you can jump in and do it faster. Unless, of course, you're wrong. So, yeah, I mean, it's a bad product if you're using it for some sort of economic purpose, but it's a good product for trading for the savvy.
That's a good way to put it. It's for the savvy. It's for the initiated. You should really know what you're getting into before you bite off a piece of UVXY. It's worth watching for a while, see how it performs, and then over time, maybe you can start getting your sea legs out from under you. Start with VXX, definitely. It moves a little slower. You can get your head around that a little bit easier. But these are two very popular trading vehicles outside of the direct VIX and VIX options. Of course, there are other flavors. You talk about it a lot on our Volatility Views program, but spikes, that is actually effectively a VIX on SPY. So forget the SPX. Most of you don't trade or touch or watch the SPX. Most of you trade SPY. How would you like a VIX on SPY itself? Well, there is one. It's called spikes. And there are futures and options on it, just like VIX. And they're starting to get more active pretty much every week out there. So we talk about those a lot on our Volatility Views program as well. So if you want an alternative to VIX that is growing deeper and more liquid all the time and is on a product, kind of analogous to what we were saying on our last episode about how the OEX is not really a product a lot of you watch. Most of you don't really watch the SPX or trade the SPX either. Most of you hang out in SPY, and that's where you kind of live and breathe and do all your best work. So it makes sense you would want a volatility product that is based on that same index. And also, if you're a little bit concerned about what we mentioned the last episode about the potential for manipulation in VIX using that kind of wonky settlement process, Spikes has incorporated something called price dragging. I won't get into it in depth here. You can look at the myaxoptions.com/spikes website for more information on all that. And that will explain that price dragging in a lot more detail there. But that effectively negates the opportunity for anyone to manipulate that. So if you're concerned about manipulation, Spikes is the way to go. Definitely. Again, not quite as liquid as VIX yet, but they're working to get it there. And it's definitely an alternative that for a lot of you may actually be a lot more relevant. So that's our 2-part vol extravaganza. Man, that lasted a lot longer than I thought, but a lot to get into out there on this topic. Last episode, of course, we started off with VIX. What is it? What is the fear gauge? What is the difference between VIX cash and the futures? What can you trade? Well, of course, it's the VIX futures and then the VIX options, but then we moved beyond that today, got into VXX, got into UVXY. And remember, a lot of caveats with those, so tread lightly. Fools rush in where angels fear to tread. And those definitely apply to VXX and UVXY. Get your sea legs under you before you go out into those products. And for love of God, again, if you take nothing else away from this episode, do not buy and hold either VXX or definitely UVXY. Those two will leave a mark in your portfolio over time. And again, there are also alternatives out there for you if you are so inclined. You don't want to mess with VIX, or maybe you don't want to mess with something like the VXX or UVXY. Those sound scary. There is spikes. I should also mention there is also vol Q. So if I mentioned before about the manipulation, you're not the only one who's concerned about that. The folks over there at NASDAQ with Scott Nations, who's been on our vol views and on our network on our pro Q&A many times, they created vol Q, which is the at the money straight 30-day at the money vol of the NASDAQ 100. No skew, not messing with any of that stuff. It's just your straight at the money straddle, which for a lot of people is what they want. And so if you want that, but on a different index like the NASDAQ has you covered. They created it. It's called vol Q. Right now, it only trades, I know it's confusing, it trades on the CME because it's a future. So it's a NASDAQ product that trades on CME. I know a little bit of crossing of the streams there, but we talk about it a lot on This Week in Futures options program. The vol Q futures, not super liquid yet. They're going to launch the options soon. I think that'll help really be a game changer for that to get more action out there. So if you want alternatives to VIX, they are out there. They are aplenty. We didn't even have a time on this episode to get into some of the inverse products like XIV. The reason we didn't get into those, listeners, is quite frankly, they're all gone. They all got blown out back in the Volmageddon of February 2018. Remember that? That seems like a lifetime ago now. Pre-pandemic. Who remembers that? But yes, a lot of those got blown up when VIX exploded, and those people who were all shorted, all those products who were shorted, all got wiped out. Well, there are some new potential ones that have been approved and are waiting to come back online. So when those inverse vol products come back online, we will definitely revisit this landscape and those products because they are not without controversy as well. There are many people out there who think products like that should not exist, or if they do, they should come with very stringent warnings and limitations on who can trade them, because the last time we had inverse volatility products, a lot of people got wiped out who had no idea what the hell was going on and what they were doing and really had no business trading those products. So there's a lot still to be unpacked here in the world of all things volatility. All right, Mr. Dan, that music means we packed a lot of living into 2 episodes of straight nonstop vol. Didn't even have time to get to the questions. I guess we'll get to those next week, sir. But before we go, if you have any final thoughts on the broad, far-ranging volatility conversation we had this week, the VIX, the futures, the options, the UVXY, the VXX, the alternatives, the spikes, the vol Q, anything you want to leave us with on those things, have at it, sir. And then B, if folks want to reach out to you with more questions, where should they go? What should they do?
My friends, there are opportunities galore when it comes to trading these volatility products, but you got to know what you're doing, man. You got to approach it with caution and with prudence. And once you get it down, then you can feel free to, get a little bit more aggressive with it. But don't be afraid of them, but don't jump in with both feet before you learn about it. And if you need help, just surf on over to our website, markettaker.com, 2 T's in a row. And, you can join our chat room. I was posting some trades that I made in the chat room today. I post a lot of my trades in the chat room, so do a lot of our top students. Right now, that's free for our listeners. So make your way on over, click join free, and we'd love to have you.
Let me ask you, Dan, in this environment right now, are products like VXX starting to creep into your rotation a little more in terms of your own trading?
Yeah, in terms of my own trading, yeah, they are. Because, I mean, hey, man, you trade what's going on, right? And that is definitely something that's going on.
That's a good way to describe it. VXX is going on.
Yeah, man. Yeah.
That it is. So hit up Mr. Dan, markettaker2ts.com. Join their community there if you have a lot of great questions or fun things along those lines. Remember, if you want a little bit more vol in your life, if you're not listening to the full network, make sure you subscribe to that because we do volatility views every Friday. There's over a decade's worth of content on that feed right now you can go listen to that will really help arm you with some great information about all these products we just talked about in a lot more detail. We kind of really just scratched the surface out there. But thanks to all of you who've listened, who've written in, who send your questions. We unfortunately didn't get a chance to get to them this week. We'll get to them on our next episode. And stay safe out there, everybody. And we'll be back again next week, another episode of Options Bootcamp.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.